Hello friends, welcome back. Today we have a special treat for you. We have a special report, executive report, breaking down one of the biggest deals of the year so far, BioNTech SE acquiring CureVac. This is a stock-based acquisition deal worth $1.25 billion. And we thought it would be valuable to break this deal down with some perspective. Today we're going to cover 5 key aspects of the BioNTech-CureVac combination. First, we'll discuss the strategic rationale before diving deep into the financial value creation and return on investment. We'll also explore the market size, competitive positioning, and finally, our valuation forecast for the merged entity. If you want more insights like this, please consider subscribing. Also, feel free to send us your feedback and suggestions in the comments section below. Alright, let's get started. Part 1. Strategic Oncology Expansion. On July 2023, BioNTech announced an agreement to acquire fellow German biotech CureVac in an all-stock transaction. The combined company will operate under the BioNTech brand. Under the terms of the deal, CureVac shareholders will receive $5.46 per share in BioNTech stock, which represents a 55% premium over the 3-month volume-weighted average closing price of CureVac shares. Upon completion of the deal, CureVac shareholders will collectively own between 4 and 6% of the outstanding shares in the merged company. This deal has been approved by the boards of both companies and is expected to close by the end of 2023, subject to customary closing conditions, including regulatory clearances and CureVac shareholder approval. This deal is a significant step forward for BioNTech, establishing it as a fully integrated oncology powerhouse and expanding its presence in mRNA therapeutics. Recently, BioNTech secured a $10 billion co-development and co-commercialization alliance with Bristol Myers Squibb for BNT327, a bispecific PD-L1 VEGF antibody. This collaboration focuses on developing BNT327 as a potential first-line treatment for various cancers. However, BioNTech still lacked a robust oncology pipeline and development capabilities. CureVac addresses this gap with its range of early-stage mRNA cancer vaccine candidates. Notably, CVA201, CureVac's lead candidate, targets neoantigens associated with multiple cancer types, including pancreatic cancer, melanoma, lung cancer, colon cancer, among others. In essence, this acquisition transforms BioNTech into a European leader in next-generation mRNA therapeutics with stronger R&D, manufacturing capacity, and commercialization reach. Additionally, CureVac's second-generation mRNA platform offers thermostability and reduced dosage requirements compared to BioNTech's first-generation platform. It's worth noting that CureVac's modular mRNA production complements BioNTech's existing facilities, addressing the latter's capacity constraints. Moreover, CureVac's manufacturing operations in Germany and Denmark significantly enhance BioNTech's geographic reach. Now looking at the value proposition of the acquisition, there are 3 key aspects. First, BioNTech gets access to CureVac's second-generation mRNA platform. This platform is particularly noteworthy for its thermostability, eliminating the need for ultra-cold storage and reducing transportation costs, especially beneficial in resource-limited settings. Additionally, CureVac's mRNA platform allows for lower doses, making it easier for patients to administer. Secondly, there's the strategic fit in terms of oncology pipeline. CureVac has several early-stage mRNA cancer vaccine candidates, which align well with BioNTech's focus on personalized cancer immunotherapy. By combining their pipelines, the companies aim to de-risk and accelerate the development of mRNA-based cancer immunotherapies across preclinical and early clinical stages. Lastly, there's the expansion of manufacturing scale and geographic reach. CureVac's modular mRNA production addresses BioNTech's capacity constraints, and its facilities in Germany and Denmark complement BioNTech's existing operations. Part 2. Market niche and evolution. The global mRNA therapeutics market is forecasted to grow at a CAGR of 13.8%, reaching $25 billion by 2030. Among various applications, oncology-focused mRNA therapeutics hold the most significant market pull, driven by unmet needs in personalized cancer immunotherapy, tumor microenvironment targeting, neoantigen delivery, bispecific delivery strategies, and combination mRNA-based therapies. The appeal of mRNA-based cancer vaccines stems from their unique advantages. They offer a personalized approach tailoring treatments to an individual's tumor neoantigens, stimulating durable anti-tumor immune responses with minimal side effects. Compared to conventional cancer treatments, such as chemotherapy, radiation therapy, and targeted therapy, mRNA-based vaccines stand out as a promising strategy in the battle against cancer. The decision to acquire CureVac reflects a shift in the industry towards next-generation mRNA oncology platforms. Real-world evidence (RWE) indicates that these platforms, including CureVac CureVac, could deliver an additional 1.5 to 2.0 quality-adjusted life years QALEs per patient compared to standard of care therapies. Furthermore, the adoption of these platforms is driven by benefits like improved adherence due to convenient dosing schedules and favorable toxicity profiles. This acquisition not only strengthens BioNTech's position in the market, but also contributes to establishing Germany as a global mRNA powerhouse alongside the US and China. Looking ahead, the outlook for mRNA therapeutics remains positive. The technology's versatility extends beyond oncology, showing promise in infectious disease, rare disorders, allergy immunotherapy, and tissue regeneration. As mRNA platforms mature, they are expected to play a larger role in therapeutic areas beyond oncology. Part 3. Competitive landscape and positioning. In the broader context of the competitive landscape, it's evident that the combined entity of BioNTech plus CureVac will have the broadest pipeline in oncology, infectious disease, and rare disorders. The merger will reinforce their unique strength in bispecifics and IP consolidation. Here's a comparison with key players: Moderna, strong infectious disease portfolio, expanding oncology efforts, valuation around $55 billion. Arcturus Therapeutics, focused on self-amplifying mRNA, promising thermostability, market cap $1.2 billion. Gridstone Bio, neoantigen personalized cancer vaccine specialist, niche player with $400 million market cap. After the acquisition, BioNTech will solidify its R&D, commercial scalability, and high-profile partnerships, gaining a competitive edge over its peers. Part 4. Market access strategy. We see two phases in how BioNTech will drive value creation in the next few years. Short-term 2025 to 2027, BioNTech BMS will jointly commercialize BNT3-7 across major cancer centers. CureVac's EU-based trial infrastructure will be integrated. Germany and the EU will provide greater support as biotech innovation hubs. Long-term 2027-2030, pan-European adaptive trials using BioNTech CureVac oncology assets. Expanded licensing of mRNA IP to support cost-sensitive global markets. Partnership with digital health platforms to increase patient adherence and outcomes, optimizing value-based reimbursement models. Part 5. Valuation Deep Dive. Here we present our 5-year valuation forecast, incorporating CureVac's contributions from 2026 to 2029, deal context acquisition cost, $1.25 billion in BioNTech stock. CureVac ownership post-merger for 26%. CureVac revenue impact, primarily realized from 2026 to 2029. Key assumptions: weighted average cost of capital WACC, 10.5% CureVac pipeline discount rate, 14 to 18% BioNTech revenue CAGR organic, 11.6% cost synergies from integration, $150 million annually by 2027, Let's look at the numbers. All figures in USD billions unless otherwise stated. 2025 total revenue equals 6.3. CureVac contribution equals 0.05. EPS equals 6.5. Discounted FCF equals 1.8. Stock price range equals $98 to $105 2026. Total revenue equals 7.9. CureVac contribution equals 0.10. EPS equals 8.2. Discounted FCF equals 2.4. Stock price range equals $110 to $118 2027. Total revenue equals 9.4. CureVac contribution equals 0.5. EPS equals 9.9. Discounted FCF equals 2.9. Stock price range equals $123 minus $130 2028. Total revenue equals 11.1. CureVac contribution equals 0.40. EPS equals 11.4. Discounted FCF equals 3.4. Stock price range equals $135 to $143 2029. Total revenue equals 12.7. CureVac contribution equals 0.50. EPS equals 12.8. Discounted FCF equals 3.9. Stock price range equals 1 for 8158. Summary: CureVac is expected to contribute over $1.3 billion in risk-adjusted revenue over 5 years, with a growing impact on BioNTech apps and free cash flow starting 2027. Part 6. Contingent Value Rights, CVRs. As mentioned earlier, CureVac's pre-commercial status introduces product uncertainty, which can be mitigated through CVRs structured around 4 aspects: regulatory milestone, FDA, MR approval of an oncology mRNA product. For example, CureVac by 2028 could trigger $1.50 share CVR. Revenue threshold: $300 million in annual CureVac-derived revenue by 2029 could activate $1 share CVR. IP licensing: major out-licensing of CureVac's mRNA platform greater than $100 million deal by 2027 could unlock 50 cents share CVR. These instruments create upside alignment for CureVac stakeholders while managing integration risks.